Good afternoon, everybody. Welcome. Welcome to the market close what is it? October 16th, 2024. Yeah, it is. It is. For a second, I had to look. I'm like, we're already pretty much halfway through the month. So that's not too shabby. We have a great show for you. We're going to take a look at the market here in a bit. We are, of course, having a green day. Hence, you can see the green sign behind me. I will give you guys a sneak peek later on of the next video or the thumbnail. I'll show you the thumbnail because it's I think it's probably the most clickbaity thumbnail I've ever done. But you guys will have to let me know. Yeah, so we got a lot of good stuff on the go. We got a bell. Let's jump into the charts. Let's pull them up. Let's see what's going on. All right. So as I said, nice, beautiful green day. We're up 0.56 on the TSX. And if you guys see this line down here, this is where we started the month. So we are still looking good. We are still in a green month. And I predicted we would finish October in a green month. So I don't want to see us cross this line at all. Although some of you who want some deals might be saying, I don't care if you're wrong. I just want some deals. So that's a possibility as well. The S&P 500 also having a pretty good day, up 0.46%. So not quite as good as the TSX, but still up there. NASDAQ pretty flat. They're up 0.03. Just pull up the NASDAQ here. So you can see, not a lot going on there. We'll take a look. We'll take a look at a few of the stocks on the NASDAQ as we move through the afternoon. Dow Jones looking good, up 0.81%. Gold's doing great, up 0.46%. Silver's up 0.84%. WTI, West Texas Intermediate, not doing the best today, down 0.69%. Now, I did see an article in the news today that Israel is now ready. They're ready. So whatever they got planned for Iran, they're now ready. So they could go at any moment. Hopefully they don't, but they probably will. So we could very well wake up tomorrow and see WTI up in the green if Israel decides to move forward. So that's something to keep in mind. Bitcoin having a great week, up 0.96 today. Yeah, and you can sort of see we've had some interesting candles. Definitely some big candles, a lot of movement, pretty much from about here, 62,000, and right now we're hanging around 67.6. We've hit 68. I have said, and this is something I have maintained, that I really need to see Bitcoin break the all-time high before the end of October, before I'll get some confidence. That'll give me confidence. Like, I'm still bullish, but that will give me confidence. So we'll see. We got half a month left to go. So we'll have to see how that all looks. Ethereum is also up, heading over to the, now that you can see, NVIDIA, just because they're there. NVIDIA sitting at 135, Tesla at 221. We'll look a little bit closer at them a little bit later. Over to our heat map, and I have to remove, I had a mirror sitting there, and it was like blocking my screen. So the heat map. Everything's looking pretty good. Not that shabby at all, really. Looking at some good green action here. Enbridge, look at them. They're up a full percent. Pembina Pipelines up 1.13. Alimentation Couche-Tard doing good today, up 1.75%. Now, I still have not heard any more updates on their new bid to buy 7-Eleven, so we'll have to see how that goes. Reuters down 1%, but what can we say? It's not that shabby. It's not that shabby on the market. Looking at our ETFs, of course, VFV doing good, up 0.25%. Both VEQT and XEQT, both up a little bit. VEQT is winning today. They're up 0.34% to that 0.30%. Heading south of the border, this is not a great day for tech unless your name is NVIDIA. NVIDIA up 3.09%. Now, some really good news for tech. So North Carolina, we've been talking a little bit about this in some of the leftovers from Helene and how they had shut down the mines. One of the mines is back in operation. So the other mine, we don't have an update yet on their progress, but one of the two is back in operation. That's really good news. That's good news for tech, definitely. So the last thing we want right now is a chip shortage. Another interesting thing about tech too, just because we're here, um, Google. Google is looking to set up some small nuclear reactors. So they're starting to get into the nuke game. So very interesting, especially for those of you who are very bullish on uranium. And this is another sign that you're probably right to be bullish on uranium. So not too shabby, not too shabby at all. All right, we still got 10 minutes until the bell. Looking at the crypto heat map, this is interesting. We got like Bitcoin up 93%. We got Solana's down by 0.17. Ethereum's up a little bit, but most of the altcoins they're looking pretty darn red. They're looking red. There's so many friggin' altcoins out there. All right, this is where I grab. Since the main market, so Bitcoin is green, we're going to go for a red. Let's see if I can find one that hopefully I have never seen before. So here we are, Doc. What's up, Doc? I don't know because I don't know what this is. So Doc USA or USD. Wow. Well, if it's USD, I'm wondering if it's like some kind of a stable coin of some sort. I don't know. I really don't know. Whatever it is, it's only worth 0.002. So it's worth basically a fifth of a penny. It looks like, well, it used to be worth, well, gosh, at one point it was almost worth a nickel. But whatever it is, if you guys know, feel free to drop it in the comments. I don't know. This is one of those 14,000 crap coins that we have floating around in crypto. I'm never going to own Doc. So I will stick to the big coins. But yeah, this is just one of them. There are so many coins. It's absolutely unreal. All right. Wow. Let's get to the comments because you guys are just flooding the comments. All right. Medidi started first. Pezorama. That's actually a dollar store. They're very, very, very new. I believe their ticker is actually PESO.V. So they are on the Vanguard. They're on the Venture Exchange. They haven't been trading for long, so they are a penny stock. I will put that out there. And you want me to look into it? Well, I don't do deep dives on penny stocks. Although I just did one, but that was because of it was a subscriber sponsored video. I am after that. I will tell you. I mean, hey, I'm a huge fan of yesterday. So, and this is not yesterday's fault. This is my fault. I blame myself 100%. I didn't really have any rules. So now because of that stock, we're going to have a few rules. One being no penny stocks. Pretty much two rules. No penny stocks, and it needs to have at least been around long enough that we could have some data on it. Because that one was a tough one to do, but I got it done. So that's fantastic. And like I said, no shade to yesterday. I blame myself. I didn't even think to throw up any rules on it. So anyway, that'll be what we're looking at next month. So awesome. We got about 6 minutes. I'm gonna jump ahead here because yesterday is in here. A $10 super chat. Thank you very much. And yesterday says, it seems some people don't like juniors. Thanks for the video. I just saw Bob McEwen and Eric Sprott were in on on Borealis Big and that their board was stacked. I thought it was worth a look. Being very truthful. I mean, I've looked at a lot of penny stocks, and a lot of penny stocks really smell. They smell like crap right away. Like, really bad fundamentals. And this one here, it's new. It is new, but I did research the company itself. I researched the company. I researched what they're doing. It does have potential. And I'm going to put it out there. It was just one that's very hard to do because there was no historical data. And it's hard when I don't have data to be able to back things up and say, hey, let's take a look at things. But in this case, yeah, it was a little bit hard to do. But I do think that, you know what? If you're one of these people with that play money I talk about, and you're thinking, I want to throw some money on a penny stock, that's not a bad one to try. You may lose your money. You probably will, or maybe you won't. There is potential there. So I will definitely say that for sure. And, yesterday is they're the GOAT. They threw in that nice looking super. By the way, and I haven't even mentioned this yet. Um, if we get 4 supers today, I am doing a Friday show. So there's one already. So you're already up one. Thank you very much yesterday. And do not take, a few, I think I got one nasty comment about it, and it was all in fairness. I'm like, don't worry about it. I'm not sweating it at all. All right. Let's get back to where I was. Okay. So with this penny stock, I saw your comment because you actually left me a comment on it the other day. So I did look into it. I will tell you right now. We've only got 4 minutes to the bell, but let's see if we can do this quickly. I brought it up ahead of time. As you can see, it's a brand new, well, it's actually not brand new, but it's brand newish. So it's been around for less than 3 years. Now they have had some issues. They've absolutely had some issues. I like their concept. I think it's a great concept. I think they're going to grow over time. But right now, they've got some serious issues. And I'll tell you what those serious issues are. Let's come into their data here. All right. If we look at their return on equity, you can see that they're very unprofitable right now. So negative 196.49%. That scares me right away. They also have a lot of debt, 214% debt to equity ratio. So for every dollar that they have in equity, they've got $2.14 in debt. So that's a lot of debt. They have a lot of work to do. So right now, as an investor, I wouldn't touch this with a 10-foot pole. But I do like what they're doing, and they're kind of following in the Dollarama footprint because they're I believe they're Mexican-based convenience store, sort of dollar store, and I think there's potential there, but I'll tell you, this is one that scares me. This one, I just could never do it. I can't touch it. I'm sorry. But yeah, if you're invested in it, I would hold it. I mean, unless it's kind of one of these things that I think they're moving. I think they have the right idea. I don't know if their execution is there yet, but definitely if you haven't invested in it, I would recommend you don't. You could maybe watch it and see if things improve. See if they work on that debt. If they can start getting that down and start showing you that they're moving in the right direction, then maybe consider. But I think right now, if you put money in there, it's probably a lost cause. And I hate to say that because I'm hoping you don't have a bunch of money in there and you're just asking me because you're hoping you're going to get your money back. Because you may not. You may not. All right. Vic says swung out of alimentation Couche-Tard with $1 profit. Well, a little profit is good. Now, when I was mentioning that if this deal goes through, that we're looking at a situation where they're going to be diluting their shares, so that value is going to be coming down. That may not happen, though. That's the whole thing. So you have to kind of keep that into consideration. So if you're in on alimentation Couche-Tard, I would just pay attention to the news, see what's going on with their attempted purchase of 7-Eleven. See if it happens. If it starts happening, then you may want to take some considerations. But, and I mentioned this before, if you're a long-term investor, and you've got you don't expect profits on them immediately, then there's nothing wrong with staying. There's nothing wrong with just hanging out in there, because if they do buy 7-Eleven, it's going to make them massive, and they will you'll make your money back, no problem. You will. It's just you have to be prepared that you may have a little bit of a red dip for a bit. All right. And Vic says, oops, I can't say what Vic says yet because we have a bell. Woo! There we go. The market is closed. We'll go back and look at the market in about 15 minutes here because, as I mentioned before, I don't know why the Nasdaq is delayed. They're delayed by 15 minutes. Everything else is up to date, but the Nasdaq. Now Vic said, now enjoying pie from the truck stop. Thank card lock. Nice pie. What type of pie, Vic? I'm gonna say I'm trying to think what kind of pie would Vic want. I'm going to say apple. I'm saying that you're going to have some. No, no, no. Wait a minute. No, I'm going to take apple back. Lemon meringue. I'm going to go with lemon meringue, Vic, as your pie of choice. My pie of choice, by the way, is pumpkin. Mary is in the house with a hello, everyone. And you know what that means, guys? That means it's time to hit the like button. I'm going to have some coffee, so you might as well hit it because you got nothing to do for the next 30 seconds. That was closer to about 21 seconds, but hey, that's yeah, we're it's fine. We got Paul in the house with a hello. Burgers almost done with my butter chicken and rice. Butter chicken, nothing wrong with that. Tom says another big jump for Air Canada. Not sure why, but happy. Oh boy, I did not see it. I was editing a video all day. Oh, let me show you. I said I would give you guys a sneak peek of the next video. All right, so give me a second here. I think this is it here. Yes. ETF tax secrets. That's coming out on Friday. So this is probably, I think it's the most clickbaity thumbnail that I've made. However, I am showing you basically we're going to look at all of the different tax breakdowns inside of ETFs, because sometimes you'll have an ETF and, some of that dividend may be foreign income. Some of it may be return of capital. Some of it may be eligible dividend. So we're going to break that all down and, explain what that all is in this video. It's been one I've wanted to make for a while. So I finally just cracked down and said, let's get it done. It's done. I'm happy with it. All right. Now that you guys had that little sneak peek, I did want to quickly take a gander over here at Air Canada. All right. Holy banana bread. I can tell already. Look at this. $17.98. Oh, boy. All right. At this rate, because you guys most of you are, hopefully most of you know that I'm running a small swing trade in the 0 to 100K challenge. So every month when Air Canada is under $16, I'm adding 5 shares. And once it gets to 20, I sell it all. Look at this. We're sitting at $17.98. If this keeps on going up, we might have to sell sooner than later. That would be funny. That would be funny because I honestly, when I started that, I didn't really anticipate $20 until, sometime in 2025. Probably, I don't know. I don't even know if I'd say first or second quarter. I was thinking in my head maybe, but yeah, they're doing great. They're just doing fantastic right now. So, and I imagine, let's take a look and see here. There we go. All right. If I pull over the challenge, yeah, here they are. Look at them. I'm sitting here with a return on investment of 17.78%. Already, that itself is not too shabby. So, yeah, that's looking good. Look at this. DRX. So, ADF group, negative 31. Oh, they keep disappointing me. Yeah, that's one that's just hard to look at. Boy. All right, that's fine. All right. Burger says we picked up a ton of ASML after that slip. It's up in the 680s. Oh, nice. Nice. Yeah, you gotta. I always love watching people who are like opportunistic investors. They're waiting for those buy the dips and they just get in there and bang, boom, they do it. That's fantastic. I love it. Vic says, I was waiting for Air Canada to land at $12, but it took off. Puns intended. Yeah, yeah, absolutely. They left you on the tarmac, Vic. They left you on the tarmac. All right. ASML hoping for 500s. Oh, there you go. You never know. Can you invest in Porter Airlines? Seems like a competitor that can survive. I don't know. This is one of those things. A lot of these little airlines don't survive. But, if they get bought by WestJet or Air Canada, that could be a small payday, perhaps. But yeah. And Chad says, bullish uranium guy here. Was surprised to look at it today. 7% increase just today. Wow. I think just the news, I think hearing about Google, there's a couple of things that are really bullish for uranium. Obviously, Google, I think it was 7. I believe it was either 6 or 7 reactors that Google was looking to set up. There's also some news out there saying that AI is pushing the limits of the power grid right now. So we need more power. How are we going to get that power? Either we use fossil fuels, and that's probably not a good idea. Or, nuclear power right now is ready to go. So I think that's going to be big. I think that will be big for them as well. Chad says, howdy all. Want 2020 market again, better deals. Ah, yes. Oh, I'll tell you. It would have, and there's probably people who saw the pandemic coming and sat on a bunch of cash and just waited for that day in March. Because there was so many deals. Imagine, let's go crazy, but imagine you had $1 million on March of 2020. You could have dropped it into almost anything that day, and you probably could have easily doubled your money. Easily. That's just crazy to think of that. Funny Books is in the house. Hello, Funny Books. And Funny Books says, anyone concerned about our sour Indio-Canadian relations on Indian market? This is the funny thing. When I think about countries we should be at conflict with, India never comes up. So I don't know. This is something I think I don't think this should be happening. I think we should get this under control one way or another, peacefully, of course. I just want to put that out there as well. But yeah, I'm definitely concerned a little bit about it. And I know right now it seems like with the government, I think Trudeau was saying the other day that, the Conservatives have their fingers in this too. You should blame them too. And I'm kind of like, come on. And here's the thing. If you've been following the news lately, we are starting, a lot of liberals are starting to stand up and say, it's time for Trudeau to go. So it's going to be interesting to see if this trend keeps happening. This is where, and I've talked about a proroguement. This is where the only place where I could see a proroguement actually happening. If, for example, if they ousted Trudeau, they could prorogue Parliament and then, have a leadership convention, get somebody new in. But we'll have to see. I know Trudeau is very stubborn. He wants to run the next election, but I have a feeling that this is just the tip of the iceberg. I think more and more liberals are going to start standing up against him, and and I have to say, I watched an interview with one of the liberal MPs from the Maritimes, and he was just saying, "Look, I'm making my statement against him because that's what my constituents are telling me." So makes sense. It makes sense to go that route. It's time. Justin, I don't know if you're watching this, Justin. Probably not. But if you are, or if somebody watching this knows Justin, come on. It's time. We all know it. Just hang up your coat. It's time. You've done well. You've done your 10 years or 8 years or whatever. Just go enjoy the sun somewhere. Let somebody else take the reins. All right. Burger says, Vic, I hope it hits 500. Burgers will be in there just scooping it up if that happens. Chad says, ACT hitting the USA market next week. Think NASDAQ. Glad I went in the limb at 91. Let's see, hit 626. Of course, they did 3-to-1 stock consolidation. Nothing wrong with that. Nothing wrong with that. Jonathan says, hold the bell. I'm almost home. Gosh, I don't know how far behind I am. So I don't know if we got there in time. I hope you got home before I rang the bell, but it's already happened. Chad says, funny books, liberals be out soon. PCs will make things better in India-Canadian relationships. Thanks for looking into it. No, I had no problem doing that. And that's, you know what? I'm one of these YouTubers in this in the financial space that I'm going to tell you if something, if I don't like it, I'm going to tell you. I'm going to be honest. That's kind of part of I guess that's my trademark. So nothing wrong with that. Jersky says, good afternoon, everyone. I picked up a TD stock at 77.50. Not bad. Yeah, I think TD is going to be, I think they're going to be struggling a little bit, but we'll have to see. We'll have to see. Oh, I have to jump ahead here for a second. It was an apple pie. You see, they always say, go with your first thought. But no, I switched it. I switched it and made myself wrong. Oh, no. Chad says, EQB or NA a better bank, I think. Get out of TD at 85 to 87. Yeah. Well, here's the thing. I mean, TD, they're struggling. So, right now they're going to be undervalued for a while. So that could be an opportunity down the road. But, at the same time, there are folks that will look at TD and say, you know what? I just can't agree with what they've been getting themselves into. It's so irresponsible. Well, a lot of it's illegal. There's people that won't want to even deal with them. And I can totally understand that as well. China's selling off again. Uh-oh. Interesting. Roku says, howdy y'all. Hello, Roku. JJ is in the house with a big old hello. Everring is still at all-time highs. Not many deals. Just DCA up. Good day. Yesterday says, I'm up 40% on my uranium profile in the last month. Yeah, uranium is absolutely doing fantastic. So I'm glad. Because I know I was talking about uranium probably, I think, was it maybe 6 months ago or so? Then it went down after I was talking about it. And I actually did a video on one of the on a uranium royalty stock, and I still like it. But it's good to finally see uranium starting to live up to some of that potential, I think, that is in that commodity. All right, DCA up today. Paul says, Justin Trudeau is wagging the dog to deflect from his own problems. Oh, yeah, kind of. It's just, I don't know. It's time. And here's the thing, I'm not going to spend the whole day talking about Justin Trudeau, but, if you get out now, just leave, retire, you'll have a half decent record. People won't remember the way everything ended per se, and you're going out on a high. But, if you kind of, if you end up leading the Liberals to one of their worst performances in their history, because we're talking about a Stéphane Dion level defeat. People, you'll lose a little bit. You'll lose a bit of that luster when historians are talking about you. So, get out now. Save face. That's what I say. Of course. Funny little story. We're talking about it. If any of you have not seen this, so Stéphane Dion back in the day had this epic election fail, but it was funny. One of the big things that absolutely torpedoed him was an interview he did with a reporter at a Halifax. So, and this thing, if you ever want to watch it, it is on YouTube. It's the most epic destruction of a politician in a thing. The reporter's name was Steve Murphy, and Stefan Dion, even in the interview, was saying, can we just start this over? It's going badly. And, the type of response he would get from Steve Murphy is, well, when you're running the country, you can't have a do-over. Things like that. It was funny when I was watching this interview. I was just thinking, oh, there goes the polls. They're falling. And it was a disaster. But it's trust me, if you if you ever want to see a politician absolutely get dismantled by a reporter, this is probably the best example you'll ever see. So definitely check that out. It's on YouTube. I don't know. You probably just put in Stefan Dion or Dion and an interview type thing, or Steve Murphy. But yeah, absolutely. JJ is saying 8 to 10 years too long. Yeah, absolutely. Well, it's kind of interesting. I mean, in many ways, I think the U.S. has it right where they have, where you have that 2-term limit for the president. So, maximum of 8 years. I think that's probably a good number. Here, I mean, yeah, normally not many get beyond 8 years because people start to get sick of them. But sometimes they do. Sometimes they do. Jay says, I made a profit selling all my HMAX and went to the boring XEQT. Now let's get this election done already. Looking forward to the dip and already missing dividend income. Nice. XEQT. Love it. Let's see. JJ Facts. Everything is too flipping expensive today. Oh, yes, absolutely. We'll definitely give you that. We'll give you that. Hello. Always good to hear from you. Well, it's always good to hear from you, ZS, as well. Nice to see you. Paul says, I sold out of MicroStrategy October 14th at 203.50, but earlier that morning it was over 220. My cost was around 162.50. Put fund right into IBIT right away, waiting for MicroStrategy to drop around 162 again. Yeah. But with what Bitcoin's been doing, and if Bitcoin does finally explode, MicroStrategy's you may not get to see it down around 162 for a long time. All right. Vic says, Paul, me too. I sold out and missed 20K of profits. Oh, that's never good. Missing 20K of profits. Holy banana bread. Oh, I still have my thing up. All right. It is late enough that we can take our final look at the market, guys. So there's Bitcoin, but we'll head back up to the TSX. TSX finished 0.5% up, 0.50, well above our line, looking good in the green. S&P 500 up 0.47. NASDAQ did improve a little bit. So they had a ton. Well, I don't know if I could call that a rally or not. Well, this was a little bit of a rally, but 0.07% for the NASDAQ. Dow Jones up 0.79. Gold still looking good, 0.44 up. Silver 0.68 now. WTI still down 0.73. Bitcoin looking good. Oh, they've improved a bit. 1.19% up. Ethereum up 0.51%. Not too shabby. And I guess where's Nvidia at right now? Nvidia sitting at 135.74. So I'd like to see them move a bit more up. I'm feeling a lot better with Nvidia now. So I do think we could see some upward motion coming up on them. So definitely cool. Whew. Yeah. Over on the heat map, Royal Bank, look at this, up 1.07. All the banks are up. Well, no, they're not. We've got TD. TD, of course, down a little bit, down 0.30%. CNQ is actually down a little bit today, 2.55%. Enbridge looking good. Most of the utilities are looking good. Here's somebody who's up 2.3. I don't know who this is. Let's take a look. Atkins Realis Group. Okay, there we go. Very interesting. Every so often I run into a company that I haven't heard of, and then I'm like, what's going on? So yeah, definitely. All right. Over to our ETFs. They're all looking good. VEQT still, they won the day up 0.43 over XEQT. But when the markets are green, we tend to also have some pretty good motion. Whoops. This Mac thing, I'm using the Magic Mouse. It's very, very sensitive. So I tend to be a little bit careful with it. All right. And finally, over to the United States, there is NVIDIA sitting up on the day, 3.13%. Everybody, well, they're kind of, they're probably, I'm going to give NVIDIA probably the only reason that the NASDAQ wasn't a slightly in the red. Visa, if you like Visa, they're up 2.95%. United Health is up here 2.71% as well. Tesla is actually up a little bit. So you can see they've been down since that that whole robo-taxi thing, but they're starting to make a move. They're starting to make a move a little bit. We'll have to see how that ends up looking out. And of course, with crypto, Bitcoin up 1.20. Dogecoin, they're having a good day, up 9.64%. So that's not too shabby at all. All right. Well, now let's get back to the chat. All right. Now we're going to skip ahead, and we get a super chat here from yesterday. I'm telling you, sometimes the small caps have good potential. Up 30% this month on Yukon Metals. Yeah, absolutely. And it really depends. But yeah, you can have some pretty darn good small cap companies. Actually, I mean, one of my favorite companies it's only worth like $3. But you know, and I'll show you guys. Let's go in here. Boop-a-doop-boo. Oh, I have to bring it up. All right, there. Nope, that didn't do it. There we go. This time it did. All right, let's go over here. So diversify. So sorry, DIV. Here we go. Diversified Royalty Corp. Oh, I clicked on the wrong version of them. Most companies you'll find have a few different diversions, but here's the main one. DIV. This is a company. They're like $3. So I actually call them penny stock adjacent. Oh, hold on. Before I talk about them, because we're responding to yesterday. Yesterday has maintained the GOAT title. And we're also only 2 away from getting a Friday show, by the way. All right, let's go back here again. So Diversified, DIV, I have loved this company for a long time. They have been around for a while. So, and you can see they're kind of choppy, but what I like about them is it's nice when they're going up, and you know, they have been up to as high as 336. I don't really invest in them though for the growth, because these guys, for me, it's all about their dividend. 8.195%. They've been very reliable, and they're one of those stocks that when you got like $4 left over after you finish buying your stocks, it's like, oh, I can just grab one of these, and you know, then there's, you know, you buy one of these, that's an extra 2.1 cents every month coming into your portfolio. So just something to keep in mind. All right, and I'm going to jump ahead again. Paul has come in and has taken away that GOAT title. So Paul has taken away the GOAT title from yesterday. Thank you, Paul. We're only 1 away, by the way, from a Friday show. Lots of time left, though. Lots of time. All right. Now, I did jump ahead of a few people here, so I need to figure out where the banana bread we were. Right about here. So JJ Pandy, I need to ease off the dividend sugar and also what I put in my coffee. Okay. Vineet is in the building. Hello, Vineet. Good to see you. Vineet's planning to start a channel soon, so can't wait to see what Vineet has for us. Penny says, historically, how have the markets performed between the conservatives and the liberals? Oh, that's a fantastic question. That is a really, really good question. I don't have an answer. I've never really researched it, to be honest, but oh, I love that question. I love that question. I would get, now this is a guess, okay? Pure speculation. But I would suspect that a conservative government's a little more friendly to the market. I would suspect, but I'll tell you, I haven't seen the data, but now I want to. Now I want to. Oh boy, that's going to bug me until I pull the data. It's going to bug me until I pull the data. So we'll definitely be talking about this in the future, Penny. Thank you. That's a great question. Oh, wow. Probably that's the question of the day right now. Question of the day. Paul says, MicroStrategy after hours 192.98 on the IM on the 1M chart. If connect the valleys, it looks like a good line to draw. Nice, nice, nice. Reverend Ramirez says, personally, still loving EQB as a bank stock. Small cap, I think. Yeah, EQB, I think is fantastic. Like I'm a customer of EQB as well as I think it's a great investment. I did do a deep dive on them. I think right now, I mean, I think EQB is going to get bigger. Now, they currently have a promotion on right now, actually, for the referrals. So I know I've got down below, I have a link for EQ Bank if you want to try it out. But what they're doing, normally they pay $25, for somebody to come over and sign up. I believe right now they're doing $50. I don't know how long that is lasting for, but that's really not too shabby. And the thing I love about EQ is, of course, no fees. That's having no fees, and the fact that they're growing. Like I know when I first started with EQ Bank, some of the features that they have now, they didn't even have then. So they are continue to grow. And to me, that I love. It's sort of like Wealthsimple. Wealthsimple was the same way. All right. JJ says XEQT too boring for me, but it's as passive as you can get. Yeah, it absolutely is. It's very passive. Let's see. Reverend Ramirez says, just looked it up. I think EQ Bank is a mid cap. Okay, fair enough. They have been growing, so that does kind of make sense. Vic says, is Div the next Hammond or Bird? The answer, no, it isn't. And I say that because Div is much more of it's more of an income stock. Like you will get some movements up and down as the market flows, but I don't think you're ever going to see any great growth component to it. It's just going to be a reliable little income stock for the most part. Yesterday says that's a good dividend. Oh yeah, absolutely. Jay says, if Trump wins, I get to keep XSU small caps. Interesting. It's kind of funny that the whole American election, I'm watching it, and it's almost like every time I think something can't get weirder, it gets weirder. Last night, there was a town hall. Quite literally, Trump decided he just wanted to dance to some music for 39 minutes. I'm like, what? Luckily, I mean, I wasn't watching it. I found out about it after the fact. When I saw it first in the news, I was thinking, nah, this is trolling me. But no, he decided to just dance. And, he's not a really good dancer, but I'm just like, what is going on? This is silliness, but oh well. It's the U.S. election. I have said since I heard that Trump was running again, I said, doesn't matter who wins. It's going to be a very interesting election cycle, and it has. I mean, we've had everything. I don't even think it's almost like a soap opera. The level of the number of weird things that have happened. So, I'm going to continue watching. It's going to be interesting. We only got 3 weeks left, roughly. JJ says EQ Bank is great if everything is digital. I still have CIBC for physical cash needs, plus still a student, so no fees. Yeah, and there are a few things right now that one thing that EQ Bank needs to get, and maybe they're working on it. I'm not sure. Check cashing. Like EQ Bank needs to be able to allow you to take a picture of a check and deposit it into your account. That's kind of the only thing I can think right now that you can't have with EQ Bank. Now, you also don't have credit cards. You can have they have a debit type cash card. So you can just move your money into that account and use it as a debit card. And that's fantastic. But I imagine, though, as they get bigger, you'll start seeing a lot more products like this. So I wouldn't be surprised to see a credit card down the road. I also wouldn't be surprised to, as I said, some kind of a check cashing scenario. I mean, and not many people need checks cashed anymore, but every so often there's that one situation where you do get a check that you just need to get cashed. All right. Patricia is in the building. Just finished working. Fantastic. I hope you had a good day at work. Whoops. I accidentally jumped over the Reverend. Reverend Ramirez says, Trump dance off versus Tesla robot dance. I don't know. Those Tesla robots, they had the moves, I gotta say. I don't know. I think my money's on the robots. My money is on the robots. Patricia says, I can't a U.S. account because I live in Quebec with EQ Bank. Okay. Fair enough. That would be another thing, too. Yeah, it's kind of interesting. I know years ago, I actually almost opened up a bank account in Chicago. um, and that was just a royalty thing, just as a way to get some money coming in through a different way. Yeah, because definitely weird. It was weird. I almost did, but then I didn't. I eventually didn't. I was just like, I'll just fill out these tax forms for the IRS so that way they don't take money. But yeah, that almost happened. And I kind of wish I had it. It'd be kind of cool to have a bank account in Chicago. JJ says, yeah, Quebec restrictions are super annoying. Yeah, absolutely. But at the same time, it's much cheaper to live in Quebec. Like, I think ideally, if I was if I was French and I could speak French, um, you know, probably one of the better situations would be to live in Gatineau and then work over in Ottawa. Because you could make some half decent money, and then you got cheaper stuff over on the Quebec side. But there's a lot of strange things in Quebec too with some of the restrictions. I did watch an article, not an article, but a news report the other day about this woman who had I think it was like a cafe shop, and everything was in French, but her Instagram was in English because most of her English customers used Instagram while her French customers were using Facebook. But the language police found out about her Instagram and they were not happy and sent her a letter to get it fixed. Her retaliation was apparently she started posting things in German just to annoy them. But I thought it was kind of funny, kind of weird. All right. Reverend Ramirez says, I recently swapped VFV for HXS. What is your opinion on HXS? Let's take a look. Let's take a gander here at good old HXS. Here we go. I do. I had to make sure. Every so often, I go into, I start something over here, and then I realize I don't have it up on the screen. So now I'm trying to be so conscientious of that. So we got the global S&P 500 index corporate class ETF. All right, you guys know, I'm going to go to that 1 year and look at this. This is beautiful. This is a beautiful slope. I love this. I wouldn't want to walk up it, but I do love it for investing. So, in the last year, I mean, they've gone from $58 to $82. That is absolutely awesome. Now, you'll notice they do not have a dividend, but that's fine. When you got growth like this, you don't need a dividend. But they are growing something fantastic here. All right. When we come down to their description, you can sort of see basically, all right. So they invest and hold the securities of constituent issuers in substantially the same portion as reflected in the underlying index. Yeah, that's fine. So basically, in a nutshell, basically they're looking at the S&P 500 index corporate class. That's what the index is called. It's not a bad index, and this is fantastic. Like, you look at that growth. And we'll just see here. Sometimes you get data, sometimes you don't with an ETF. That's fine. hold on, let's go back here and let's even go further back. So we looked at the 1 year. Let's go to the 3 year. All right. Yeah. So basically, since they've pretty much been on the way up since 2022. So that's not too shabby. I like that. I like that quite a bit. So I think that's not a bad. It's definitely not a bad. Now, when you look at VFV, and we'll go to VFV now. I mean, they're both on the way up for sure. Like you look at the 1 year VFE, same general idea. The only real difference here is that VFE is paying out a small dividend here. It's not a big one. It's like 1.026%. Um, HXS, they're not paying out a dividend. They're putting everything into growth. So um, I don't know what the management fees on the two of them, but I think that's a fine move. I think that's okay. I don't think there's any. I have no negatives on HXS or VFV. I love them both, to be honest. All right. Oh, and JJ popped in with an opinion. So HXS is a corporate account for the S&P 500. It has no dividends at all. I would just be careful of the low volume and liquidity. Otherwise, seems fine. And the low volume and liquidity. A lot of times, I will say, if you're looking at long term, that's not as much of an issue. But when you are looking at, moving things more often, so like swing trading, or even just some short to mid-term trading, that might be more of a concern. But I don't think in this case it's that big of a concern. All right. And before I read 9, I'm going to have some coffee. All right. 9 says, I sold my book cost for BTCY at 11%. Green figured I'd take some profits, add more if Bitcoin crashes. Okay. That's not too shabby, not too shabby. Now, as I said, I'm pretty bullish on Bitcoin. I do think we're going to see some movement. And let's just go with Bitcoin here for a moment. So right now we're at 67,882. I mean, we've had this very strong push, and we're at that point where it should be exploding. So this could be the prelude to what's going to happen. Or, maybe this is it. Maybe this is the final time and Bitcoin just doesn't live up for the first time in its history. Which one is more likely? Playing the odds, I think the odds are that we're going to get something big happen, opposed to, but when I say big, you got to temper that, right? I'm not thinking that we're going to be going to 100,000 or 200,000, not right away. I think I could see if we had a big explosion. So let's say this time around we have our big explosion. In that case, yes, maybe we could get to 100,000. I don't see us going much higher than 100,000. Maybe we could get up to, I would say, maybe 112. But this, of course, is not going to happen in October. October, I will be happy if we get about, between 75 and 80. That's kind of where I'm looking for the end of this month. But, and I say this, there is that other thing. And one of the other big factors right now is the presidential election. So there's a lot of analysts who believe people are not, they're kind of sitting on the sidelines waiting to see what happens with the election before they really make any movement. So that could maybe hinder things a little bit, but we'll continue to watch, and we'll watch it together, of course, because we always cover all the things. Patricia says, yes, we have so many restrictions in Quebec. Language is something else, but I get it. But sometimes, yeah. No, I mean, and I understand. Like, here's the thing, I understand when you have a situation, or if you have a community, that has the distinction. Like Quebec is very distinct, and if we get a situation where more and more people are, leaning English instead of French, and that there is a possibility of the French language going out, I can understand why the government would be, the Quebec government would be concerned with that. Going into full language police, is that necessary? It's hard to say. If anything, I would be more inclined to say, there's probably better ways to encourage people to keep the language alive. I don't think that, and I honestly don't think we're in a situation where, like we're like 5 years away from Quebec no longer being friends. I don't think that'll ever happen, to be honest. But it's just one of those things where I think they need to be a little bit, probably a little bit more lax on some of the language laws, because I know with some of the signage stuff that where you have to have a French sign and it has to be bigger than the English sign. But there's a lot of stores. Their name, their brand is an English name. So how is that going to work? Like take Canadian Tire. What are you going to have to put out up above of that? So I think it's going to be fun. It's going to be interesting to watch how this all works out. But we'll leave that for now. I will say, Montreal is one of my favorite cities. I love Montreal. Always have. And if Montreal became more English than it already is, it could lose a little bit of that specialness, and I wouldn't want to see that happen. So, Quebec definitely, and I live in Ottawa, so I'm very, very close to Quebec. Patricia says, "Can the market continue in this bull run until December?" That's the question, right? That is the question. Now you got to look. There's a few different things here. One, right now, the market just seems to be unstoppable. Everything keeps on going up and up. Um, and now we got the election coming. And the funny thing is, what the election's going to do is remove the volatility. And we have to sort of keep seeing how things go. If both, Canada and the US sticks to the soft landing, that as well is pretty bullish for the market. So can it keep going until December? Yes, it can. Will it? That's hard to say, but there's a lot of different black swan events that could absolutely throw a wet blanket on the celebration that we're having. But I think if save without any big black swan events, I can't. I think we can. I think we can. I think we actually can. And we'll know. We'll know because I've already got everything scheduled out to the end of December. So hopefully it's going to be a green December. Nine says, I personally don't like Bitcoin. That was fun money. I figured I'd take the profits because 11% is around the market average for returns, and that's fine. Taking profits, like it doesn't matter what it is. Anytime you take profits, it's always a win. That's what I say. Taking profits is definitely good. All right. Vineet says, thanks for the shout out. Always nice to be heard and seen. Hey, absolutely. Absolutely. I honestly can't wait. I can't wait to see what you're cooking. I cannot wait. I will definitely, I will definitely be one of the first to come over and check out your channel. I'll throw you a sub and maybe throw you some tips as you're going along. So I can't wait. It'll be fun. All right, and we got a super sticker. We got a super sticker coming in. That means that Mary is not only the keeper of the likes. It means that Mary has now taken over the GOAT role. So Mary is our new GOAT, and it means we have a show on Friday. So we got ourselves a market close. Fantastic. I can't wait. I like Friday market closes because then it's like the gateway to the weekend. So that's going to be fun. Now, last week's probably the first Friday we haven't had a market close in a while, but we did do a market open. So that was kind of fun too. What was really nice about the market open is that I think some of the people who, some people like who I don't normally see as much were there because of the early hours. So there's a lot of people going, yay. So nothing wrong with that. Nothing wrong with that at all. Whew. Vic says, Peter Lynch calls buying stocks when they dip bottom fishing. Well, I wouldn't call it that. I would call it as, you're getting a bit of a deal. It's not like it's kind of, and this is where I'm kind of torn. I'll put it out there. So when it comes to investing, the number one way to make long-term profits is dollar cost averaging. You know, it's hard to beat it. Timing the market will usually not work, but, and this is why I always mention sort of a hybrid version. So if you are normally dollar cost averaging into your tried and true favorite stocks, but you have a little bit of money set aside for those dips, and then you buy the dips. Those are not that bad. It's not that bad. Now, mind you, and this is kind of it's time to go to the whiteboard. All right. Oh boy. I need a button so I can just I can do it that way too. I need a button so that I can very easily remove stuff on the whiteboard, all of it at once, because right now it's like I'm removing little pieces here. What was this? Oh, this was all about income. Oh, by the way, guys, as I'm removing these, tomorrow night we have the channel member live stream. So that we're going to be talking about how interest rates influence stocks and how they influence bonds. So stocks and bonds, all of that fun stuff. That's tomorrow night, 7 o'clock Eastern for the channel members. If you're not a channel member and you want to catch it, not a problem. There's a little link down below. It's like a dollar sign. You can go in there actually, I was going to say for the price of a coffee, but coffee's just gone up quite a bit. So probably for half the price of a cup of coffee, you can definitely join the channel membership and come by and check that out. All right. What did I actually go in here for? Oh, right. I don't mind the pumpkins. Where's my drawing? Here's my drawing stuff. Okay. All right. We would pick a good color. We'll pick blue. We'll pick blue. All right. I'm just going to draw us. This is just going to be a stock. So this is a stock. Let's say it moves like this. So the dollar cost averager, as we come in here, I'm going to add a text box. Oh yeah. Let's see if I can do that. There we go. Let's put a buy. Oh my God. Add text box. There we go. We'll put in a nice B in here. We'll make it bigger. Just give me a second here. Let's make this nice and big. So I want you guys to be able to see it. All right. So with a dollar cost averager. All right. So you're going to come along. I'm going to move this over here because that thing's in the way. You're going to buy at regular intervals. So sometimes you're buying when it's expensive. Sometimes you're buying when it is when it's cheap. So all of that fun stuff. All right. Let's, they got a deal there. But here's the thing. When you're looking at the price, so sometimes if you're saving money to buy, so let's say, for example, no, come on. All right. There we go. All right. That's fine. Sometimes if you're saving money to buy, so let's say you're down here, this person is buying and you're like, oh, well, I'm going to wait for that dip. So you're going to wait for that dip. I need the drawing stuff back. So you're waiting for that dip, and I'll use a highlighter. So you're right about here, and you're waiting for the dip. Well, here's the dip up here, right? So yeah, you got the dip, and you're like, oh my God, I got it at a sale. But look at this. If you would have bought it here when you began waiting for the dip, it's actually cheaper than the dip. So that's one of those things to keep in mind. And it is true. It is true. Now, with sometimes you may get a situation where if you have a really big crash, maybe that's not the situation. Or if you're at a point where you're watching it go up and you know it's due for a correction, well, that's a little bit of a different situation too. Like if it, when it goes up like really high, all of a sudden you're probably going to get a correction after it peaks. So that might be a situation where, you may not want to buy going up. But dollar cost averaging will give you the average price of that asset over time. So as you can see, sometimes like right here, you bought the dip as you were dollar cost averaging because it just happens to be luck. Here you completely missed it, right? Here you got almost a bit of a deal in here. And here you completely missed it again. But you're going to miss it sometimes. You're going to, you're going to buy on peaks. You're going to buy in the valleys, but you're going to have that nice middle thing. So that one person though, who's always waiting for the dip. So as they're down here waiting for the dip, they lost that buy. That would have been a great buy compared to right there. And, instead of buying here, they're waiting for the dip again. All of a sudden, here comes their dip. This time they were okay because, you got there and they maybe bought there if they hit the dip dead on. It's sometimes really hard to time it. So it's just something to keep in mind when you're thinking about buying the dip. I'm kind of that person that's like, I will have a little bit of cash on hand. And it's not that I'm waiting for the dip for any one particular stock. Usually for me, what I do is like, like with the stuff I have in cash. So it's making money. So it's actually making almost 5%. So cash, by the way, that is a ETF. Let me show you guys just in case for people who have not yet seen cash. There's others as well. This is just the one I mentioned because it's so easy to remember. So it's the Global X High Interest Savings. And when we look at it, let's go to the year. You'll see it basically just moves over this same shape over and over. So it basically maintains about $50 and it will rise to about $50.19 depending on where it is in the cycle, and then falls back down. These falls are your ex-dividend day. So normally what I do is I only invest, like I only put money into cash when it's at 50, or a few cents above it. And then I have money in there I'm actually going to make even more profits on the way up if I do need it, if I get that opportunity. If, of course, no opportunities are presenting itself, I am still getting a distribution of 4.505%. So it's not like money just sitting there not making money. It's making money. And I have that as an emergency fund. Well, not even emergency. I shouldn't say emergency fund because that's a separate thing altogether. But I have that sitting there so that if something were to happen. So let's say, for example, there was some negative news about bird construction and they went way down. I'm super bullish on bird construction, but if they ever went way down, especially if they went underneath my adjusted cost base, I'd be pulling money out of the cash and probably putting it into bird construction. That's kind of my example there on what I'm talking about. All right. I went off. I get off all the time. 9 says, marry the like button champion. Absolutely. Yeah, me and my tangents. Reverend Ramirez says, whenever I take profits, I dump it into ZMMK, but now I'm kind of cash heavy. 18%. Oh boy. Yeah, that's pretty heavy. Right now I'm actually not cash heavy. Right now I'm at about 1 point something percent. 1.2 maybe, 1.3, somewhere in that vicinity. Jungle says, I'm up 20% on NVIDIA and have thought about cashing out. Yeah. Well, it depends. I mean, here's the thing. You don't have to cash everything out. You could always this is what I say. If you're stuck and you're sitting in profits in a stock and you're like, I don't know if I should take them or not. I really don't know. Well, nothing says you have to take all your profits. You could always take half your profits. That way there you, and then if you change your mind, you can come back and take the rest. But there's nothing wrong with that at all. You can certainly, you don't have to do all or none. Kenneth says, yes, dollar average works. I also do hybrid and sell when I see overbought occurred. Yeah, nothing wrong with that. Bismarcky is in the house with a happy Wednesday all. Reverend Ramirez says, what does hybrid and sell mean? Now, I believe that Kenneth is talking about kind of like what I was just mentioning, where, you dollar cost average most of your money, but you may have some money set aside to look for, big corrections, for example, that you want to get in. So in a way, you're buying the dip, but you're also dollar cost averaging at the same time. And he said sell as well. And that's usually, if you have a stock that is, overbought, basically meaning that, it's kind of ripe for a correction. That's kind of what happens with overbought stocks. That's not a bad time to consider selling, but you can also be wrong. Sometimes I've seen overbought stocks that just continue pumping no matter what happens. At one point people were complaining about NVIDIA being overbought and they just kept on plowing through, other than what happened with that last earnings call. Speaking of earnings, we are heading into earnings season again. So that's something to keep in mind too. All right. And they're just Kenneth responding. Okay. Jungle says, I DCA with my paycheck and make big buys with windfalls. Okay. Interesting. Nothing wrong with that. Jeff says, I told myself when Tesla was at 260 for the second time, I promised myself that I would take profits, but I gambled on the robo-taxi event. Uh-oh. Propelling it higher and back down, we went sad. It happens. But here's the thing. Tesla will get back up. They always do. So my advice would be don't take a loss at this point. It was funny going into the robo taxi event, and you guys, you guys can just watch some of the old live streams if you want to see my position on it. But my position was I didn't have a good feeling. I didn't have a clear indication that they were going to go up or down. So I was not going to touch it. I was not going to play it at all. And I'm glad. I'm glad that, I went with my gut on that because that's not good. Let's see. Bismarcky says, are concerts in Quebec in French only? I can answer this. I can answer this one. No. The answer is no. And the reason I know, Billy Idol recently did Montreal, and somebody posted it up on YouTube, and I was just watching a couple songs, kind of curious to see. But he doesn't speak French, so he was talking in between in English, no problem. So obviously, yeah, if you're a non-French speaker and you want to tour Quebec, you can certainly do that. Jeff says, let's see, I bought it luckily at 150 when it was down big, so still up. Okay, well, there's nothing wrong with that. Nothing wrong with that. I do think it's going to go up higher, though. I just don't think it's going to be that it's going to happen right away. I think it's going to, I think one of the big problems is, and this is where it may actually change. One of the big complaints with the robo-taxi event is a lot of Tesla investors were upset because there was no new cars, no new models, nothing for them to really, other than the dreams of, this will be ready in 2026, 2027. That's not what investors wanted. They wanted something that they could put their hands on right now, whether it be a new model or something. Now, it could be, and I don't know, I have no insider information on this, but if Tesla does have a new model, maybe they're holding it for their earnings call. If that's the case, that could be big. Like if Tesla were to announce a new model at their earnings call, they'll get that money. They'll get that, they'll take back what they lost. I think no problem. All right. Vaughn says, what's your view of BN and BAM? Brookfield. Canadian royalty. Canadian stock royalty. That's a simple answer. But holy banana bread. Let's start. So BAM, one of my favorite stocks. I'm going to put that out there right now. And they've been having lately. They've been doing really, really good. Here's their 1 year. So this is just great. BAM, Brookfield Asset Management. They're just to me, they're an awesome stock. Now, I'm invested in BAM over Brookfield Corporation, so BN, and that's only because when the old BAM, so BAM.A was the old Brookfield Asset Management, so they basically they didn't break up, but they spun themselves into two companies, Brookfield Corporation, so BN, and the new Brookfield Asset Management, BAM. So Brookfield Corporation, BN, took all the debt. BAM got to start without any debt. So, and plus BAM has most of their premium assets. So they were looking at that as being a much more premium solution. You also get more dividends with BAM. However, so this is BAM right now. So they've gone in the last year from $41 to $69. That's crazy, but that's fantastic. Well, look at BN. BN is actually they're overperforming in my opinion. BN is just and that's not a bad thing. If you look at BN, they've gone from right here $42 to $75. They've actually outperformed BAM. So they're both, I think these are both really good stocks. Um, and I'll show you right now. Let's pull, whoops, that's not the right one. Give me a second here. Here we go. TFSA challenge. You will see I do have BAM in it right here. It is sitting right there. Currently, the return on investment, total return, is 35.69%. 35.69%. Fantastic. Love it. One of my favorite stocks. So I do love BAM a lot. And I love BN as well. So yeah, those are great, great, great companies. Reverend Ramirez says, still never been able to figure out BAM versus BN, so I own both, but I'm leaning to putting it all on BAM instead. Thoughts? Well, I think I just answered that. Honestly, if you own both, I would probably just stick with both for now. And maybe if you like BAM better, because that's where I put my cards. I put my cards on BAM. You could always just continue to invest in BAM and just let BN grow. Because right now BN is just doing so well. Now, if that reverses and BN starts to slow down, then maybe sell it and move it over to BAM if that's what you want to do at that point. But I do love both of those stocks a lot. Biscuit says, combine NVIDIA with YNVD and take profit with YNVD holding NVIDIA long. Yeah, exactly. Currently, right now, I think, just sort of, all right, give me a second here. I'll show you guys here. I do have to update it, but I do have YNVD right here, Purpose NVIDIA, that in the challenge. Right now, it's sitting at 16.53% total return. But I did get into this late. So most of the big explosions in NVIDIA had already happened. But, I mean, this is a fantastic, it is a fantastic covered call ETF if you're looking for one. The only concern is when NVIDIA has a massive explosion in price, you are going to lose upside potential on it, but you are getting really good dividends. So, I mean, right now, I haven't had it that long, and I've already made $9.50 in dividends in the challenge. So that's not too shabby at all. Jeff says, Chemical flying once again today. Lots of talk about uranium. Yeah, and we talked about that earlier in the show. We had Google, who's going to set up nuclear reactors to start powering some of their data centers. And there's a lot of talk. There's a lot of talk about AI and how we're hitting limits on the grid. So AI needs a lot of electricity. And as AI gets better and better, it needs more and more. So I can definitely see nuclear being a huge thing. And things like uranium, I can see it being really, really, really big. All right. Let's see. Dido Tesla. Same thing with Tesla. Been working great. Okay. Fair enough. Chad says, I really like BN, newest to the portfolio. Bismarcky says, I DCA every day, $25 into VFV, and try to buy $25 more when VFV is down early in the day. Yeah, there we go. Nothing like that. POW. So POW is like BN. POW. So POW is Power Corporation of Canada. So let's just pull them up here for a minute. They're not, if I had to choose between the two every single day of the week, I would choose BN over POW. Now, I like POW. I do like POW. I don't want to, I don't want to sound negative on them. You can see they have been moving up. So they had okay year, $33 to $44. So when you look at the size of some of the movement, like Ben, like Brookfield Corporation, it's much more. It's huge. So absolutely, Brookfield is blowing Power Corporation of Canada out of the water when it comes to returns. Now, POW does have bigger dividends. They actually have 5.08%. So you factor those in, you're still getting blown out of the water. So I do like, Power Corporation of Canada, those of you who are Wealthsimple fans, they are the majority investor in Wealthsimple. So they hold more shares than anybody else. So in a way, they're almost, I've heard people say, oh, they're the owners of Wealthsimple. They're not technically the owners, but they have a lot of shares, a lot. So in a way, investing in POW is like investing in Wealth Simple, but yeah, Brookfield Corporation blows them out of the water when it just comes to the returns that they have pulled off. All right. Paul says Tesla earnings are next week, October 23rd. Yes. Tesla sales of our number one Model Y, number two Model 3, number 3 Cybertruck, and EV sales with rest of manufacturing doing worse. Yeah. And that's the thing. I'm looking for a surprise. I'd love to see a surprise model announcement. Oh my God, Tesla would blow up if we had that. But we'll have to see. We'll have to see what that earnings call turns into. But that reminds me, October 23rd. It is also Bank of Canada meeting day. So, and I know I put this in the title. I talked about 100 basis points. So what the heck am I talking about? So with the CPI that came out earlier this week, my God, we're well below 2% now with inflation. So I was a little bit worried about that jobs report because where it was so good, I was thinking, oh, that might take some pressure off. Maybe we're going to get a 25 basis point cut. But with CPI coming in at, 1.6, yeah, we're pretty, I would say we have about an 80% chance of seeing a 50 basis point cut next week. So that would be on the 23rd. We have a show that day too, which is fantastic. Now the 100 basis point comes because we only have 2 left. So October, there is not a meeting in November. The next one is December. There's a lot of economists who are thinking that the Bank of Canada is going to do 250 basis points between the two of them. So we could potentially be looking at 100 basis points before the end of the year. That's crazy, but if you haven't sort of put yourself in that position with some of the sectors that are going to do really, really well if that happens, you might want to try to get a little bit of exposure. So, for example, I think REITs are going to really, really do well. I also think utilities are going to do well. And I think we'll start to see a movement in communications, especially if we get a full 100 basis points. That's going to help them big time. So it's just something to keep in mind. What are you guys thinking? Are you guys thinking we're going to see a full 100 basis points between now and the end of the year? Are you on Team 100? I guess we'll call it. So drop that below. Let me see what you guys think. Kenneth says, anyone knows if cash TSX settle as T+1 day? That what I heard, but I don't know if it's true. I believe it would go with the T+1 day. So like, for example, if you needed cash immediately, that's probably not the place to park it. That's why I would say don't put your emergency fund in there, because your emergency fund is something you need access to immediately. So this one would, because it is an ETF, so it is gonna follow that T+1 day. Now, somewheres down the line in the future, I know they would actually love to see that T+1 sort of disappear. And it could happen. It could happen. I know that there has been talk about it behind the scenes. Just imagine there may be a day where you could sell your stock and have your cash by the end of that day, or maybe the next day at the very latest. That'd be kind of cool. Reverend Romero says, sorry, I missed the beginnings. Was there a uranium ETF that was preferable, or some Canadian uranium mining stock? Yeah, there's a lot. I guess there is a lot. So, one of the ones that I liked was uranium royalty. So let me just see here. There we go. So URC is one of the ones that I like, because I have an affinity for royalty stocks. Now, I'm just going to go to the 6 months. So, this was a stock that, as uranium wasn't doing so good, it kind of filtered down, but now it is on the rise. So it's definitely something out there. And there are lots of different, I know some people here like Cameco, for example. And let's see, Chad mentioned URA. So we'll pull up URA for you. All right, so this is the Global X Uranium ETF. So it is a US one. All right, we'll pull it up here and let's just take a look at this 6 months. And you can see it did the same thing as the royalty stock, and that makes sense. But now it is on the rise again. So, and I do think that uranium is going to have, I think uranium's going to have a really good year. I think 2025 will be big for uranium. Yeah, there's just no way around it. All right. These job reports, do they define by full-time and part-time? Yes, they do. Let me show you. All right. Reports, Canada calendar. Hopefully it's still up there. Hopefully it is still up there. Oh, it may not be, because that was last week. Let's see. Yeah. This is the one thing I don't like about my calendar. Once you're past a week, it's gone. This is from Trading Economics, but they do break it down. They will break it down by. Let me just see here. I don't know if this has. We're gonna try this. I've never actually tried any of the stuff on the side. Maybe it'll bring up a past one. Let's take a look and see. All right, so let's take a look here. Minimum wage, labor costs. I don't care about that. Later productivity, full-time employment change. Yeah. All right. Well, this here does bring up a whole bunch of past data, but yeah, the report will show you how many new part-time jobs, how many new full-time jobs. So that way there you can sort of get a gander at it. So I know in that last labor report, we actually gained a lot of full-time jobs and we lost a lot of part-time jobs. But that makes sense because it was for September. And with September, a lot of students the ones who managed to find jobs are now leaving their jobs. So you expect to see September is almost always going to be a negative part-time job. And there was a lot of full-time jobs added, but it was actually a really good report. So, but yes, they do define, they do look at both full and part-time. They'll give you a lot of different data, and you can always dig deeper as well. You can go beyond the reports if you really need to get extra data in that. All right. We looked at that. 50 point would be great for telecom. I agree. Let's see, what ETF would you recommend? XRE or VRE or other? Oh boy. Here's the thing. Let me just close out of that. Let's head over here to now there's a couple of different ones here. Now, I'm going to start with the one that I've been playing with. All right. Now, this one is a covered call. It is a covered call one. It's new. It's absolutely new. As you can see, it started at $16 back here on June 20th. So it's riding up the wave. And yeah, there was a little bit of a correction here, but it's back on the way back up again. This one is fantastic. Now, I think REITs are going to be more of a steady rise, which is good for a covered call. That's one of the reasons I like it. But the other reason I like this one is that it only holds 50% of Canadian REITs. The other 50% is US REITs. So you're getting exposure to both markets. We're much deeper into our rate cut cycle than the US. The US has just begun. So I think this is going to be a strong contender. And keep in mind, it's also giving me an 8.894% dividend at the same time. So I'm very happy with this one. So it is definitely going up. Now, you did mention VRE. Let's go and take a look at VRE. And I think you're going to see a similar story. All right. So this here is your Vanguard FTSE Canadian Capped REIT Index. And let's go to we're going to go to the 6 month. And you'll see, same story here. It almost looks the same, like the same chart if you think about it. Other than they have all of the old days. But you can see since June and the rate cuts, we've had a nice steady rate up. And now keep in mind, next week when we get a 50 basis points, providing we get that, this is going to get another pump as well. So this one here, it does have a dividend, 2.426%. And I can tell you right now, you also mentioned XRE. I guarantee you XRE is going to look the same. And so this is the iShares Capped REIT Index. Let's go to that 6 months. Here you go. Look at that. Exact same shape. Since about right here, this June, up, and then there's that little correction, and now it's going back up again. So I think you'll do well on any of them. Now, this one has a slightly, I think this one, I can't remember what the dividend was of the last one. I think this one's a little higher, 4.49%. So with this one and the Vanguard one, if there's an absolute explosion in the price of REITs, you're not going to see any of that potential capped. That's the best thing about these. The covered call one, yeah, you are going to see some cap potential if we got an explosion. The other thing about that is that these ones here have Canadian REITs only, where the RMX has, or the RMAX has the US in addition. So it really just boils down to what I think works for you. All right. And Chad's mentioning CRT.UN. So I believe that's Chartwell Residences here. Let's see. CRT. No, CRT is the C. Oh, that's the Canadian Tire one. Okay. Ha ha ha. Yeah, this one has been doing pretty good. So let's go to their 6 months. And you'll notice the shape looks the same from June up, and there's that little correction. And you're going to find this on most. There's maybe one big exception, and this is a REIT that I would say stay away from. SOT, the Slate Office REIT. This is a REIT that has they've suffered. Look at them. A year ago they were up at $1.28. They're down. They've come down, but you'll notice that they don't have that same shape. When we go to the 6 months, they were still going down. They've had a little bit of a bleep here, but and go back. If you go back, at one point they used to be up around $5. So this here is a REIT that they just not a good REIT. So SOT, guys, don't get in on it. Even if you think, oh, it has to come back to $5. No, it doesn't. It doesn't. So far, with all of the positive stuff for REITs, this one's just not responding. It's like it's like one little blip here, but I mean, yeah, this one's a dangerous one. I would stay away from SOT if I were you. All right. And Jeff says thank you. All right. Guys, we're getting towards the end here. If you guys have a final question, throw them in the chat. I'm going to have some coffee while you guys figure that out. But yeah, no, it's been another fantastic stream. Oh, so good. And of course, on a Friday, we will be back here. We're going to do it all over again. And I'll show you guys again. For any of you who missed it, this is the next video coming out, ETF tax secrets. So there's your look at the thumbnail. This is probably the most clickbaity thumbnail I've ever made. So that is coming up on Friday. If you guys want to find out when things are happening on the channel, there's 2 ways you can do it. One, whoops, it's not a heat map, that's for sure. But over on the Discord. Whoops, I clicked on the wrong thing here. We got the YouTube schedule over here. So this is absolutely everything. And right now the schedule goes all the way up to January 5th. So this way here, you'll know. It doesn't tell you, like I have no clue. Like on November 26th, there's a video. I do not know what it is yet. So, but as soon as I do know, I will definitely add it in. So one of the, oh, look at this. I haven't updated this yet. So we're on this market close right here. We'll get rid of it. Bang, bang, bang. It's done. And we'll also get rid of this here. That was the subscriber. All right, there. Now it's up to date. So next big thing tomorrow night, channel member live stream. The ETF taxes video, the one that you saw there, that's on Friday. This week on the weekend, that's our weekend live stream. Then our next video on next Tuesday, 5 high dividend ETFs under $15. So we're doing the ETF version. We did the stock version the other day. That's going to be coming up next. We don't have the deep dive out for this yet. But here's something I wanted to point out. So right here on October 29th is the channel members choice video. So the channel members will choose the video, but I will need ideas. So I will drop probably before the end of this week. I will drop something in YouTube on the community tab, and everybody can give ideas. And then if you go in there and you look at an idea and you like it, just click on the like button next to the idea, and the whichever 5 ideas have the most likes will be the ones that the channel members will vote on, and they'll have the final say on what that video is going to be. But all of your ideas will be awesome, and we'll pull them in. We'll pull them in. I can't wait. I can't wait. Normally, I made them come up with the ideas, but they've been kind of dropping the ball on it. It's like they come up with a couple, and I have to come up with some. I have to go through old ones to see some of the previous ideas and bring them forward. So I'm fantastically happy about opening it up for everyone to come in with some ideas, because I imagine, like, you could put in anything. You could say, I want a deep dive on this, or I want an explainer video on this. Yeah, there's no real limit, just as long as it's finance related in one way or another, and then the channel members will, of course, decide. All right. What is the opinion on TD? Good old TD. All right. Oh, the other place, just before we get to TD, the schedule is also over on the Facebook group page. And eventually we'll be able to have it on YouTube as well, because YouTube is making changes to the community tab, and they're going to create sort of like almost a Discord on the YouTube itself. So we'll be able to put stuff like that right into the YouTube. So that's going to be fantastic. But all right, TD. Oh boy. So TD has had a lot of issues. Oh yeah, this is one I have to always type in Toronto. For some reason, it just will not give me. TD won't bring it up. Oh yeah, look at this. They're still suffering. They're still suffering. I don't even want to go to the 3-year. Let's just go to the last 1 year. So right here, this giant cliff, that of course is a $3 billion fine coming through in the whole money laundering thing. So TD has had they've been kicked. They've been kicked over and over again, and they created a lot of their own problems. I mean, everything from the money laundering stuff in the US to some of their data stuff, and they even got hit as well for manipulating the market. So it's going to take a little while. I think right now people are a little bit, they're a little down on TD. They definitely are. I think TD will probably stay down. I don't see them recovering fast. They will recover. People forget. People always forget. But if you're a long-term investor and a fan of TD, then these are great times for you, because you're going to be able to DCA in at some really low prices for a bit. But I think TD is going to be down for a little bit. I don't see them recovering fast. They will recover, but not fast. All right. Any thoughts on Shopify? Good old Shopify. All right, let's pull up Shopify. All right, here we go. We'll bring up the 1 year. So Shopify, they've been doing better. They have been doing better. Now, one of the issues in the past with Shopify is that one of their big competitors was Amazon. Now, they did not that long ago, I think maybe 3 months ago or so, they did work out a deal with Amazon. So they're actually working with them, opposed to having them as a competitor. That's going to be good for Shopify. I still think Shopify is strong. I think, the online retail space is only going to get bigger as more and more people move away. 'Cause, like, how many of you have been to a mall in the last week? How many of you have been to a mall in the last month? And I'm not talking about going to Walmart, or not. Sorry, Walmart I guess counts, but I'm thinking just a mall perhaps, or not getting groceries or something. Nobody does it anymore that much, other than there are a few big destination malls. I mean, if you live in Toronto, or there is that new mall. I think it's in Montreal. Those might be more destination, or if you live near Edmonton and West Edmonton Mall. But I think the smaller mom and pop mall type things, I think they're on the way out. People are buying online. I see that as probably being big for Shopify. And I would say that, I don't think they're ever going to be I don't think they'll ever explode the way they used to. I think, but I do think they'll be a steady company. I think they will do fine, but they're still. And I say this, and I will say they're not a company I really care to invest in, but I think they will be fine. All right. Steve says, as a retired person, I like Canadian companies that has a good dividend, 4 to 5%, and raises dividends every year, 8 to 12%. Any recommendations other than CNQ? So you're looking for 4 to 5% and raises their dividends every year. Now 8 to 12%. Now that part I don't know. I don't know exactly how much they have, but there's a few things. You can start at the top. So what you're looking at is you're basically looking at dividend aristocrats. So a dividend aristocrat, basically to become a dividend aristocrat, you have to consecutively raise your dividend for 5 years in a row. Now there's also, going deeper into the aristocracy, there's the dividend kings. And we have 2 dividend kings in Canada. So to become a dividend king, you have to raise your dividend for 50 years in a row. 50 years. Now we have 2. I'll show you both. Let's go. Let's take a look. It's time to get our royalty on. First of all, our first dividend king was Canadian Utilities. All right, so we'll pull up the last year. Now you'll notice since June, because this is a utility company, another one of these companies that loves rate cuts. It's doing fantastic. So since the rate cuts, it's gone from $29 to $36. Now their dividend comes in at 4.932%. So it's definitely within your 4 to 5%. Now, if we look at the size of the raises, let's take a gander here. So, all right. So their last raise was going from 44.9 to 45.3. So that's not too shabby, but that's kind of like the sizes that we're looking at. But it is a utilities company, dividend king. A company like this is never going to, I can't say never, but the odds of them ever not raising their dividend is slim to none. The other one, and this is the new dividend king, they became a dividend king within basically last December, is Fortis. And this was actually, Fortis was the first stock I ever bought. And once again, we'll go to the 6 months and you can see, you notice how this looks almost like the REIT look? You get that same shape, but they've been doing fantastic. So they've gone from 52 to 61 since the rate cuts began. Their dividend, a little bit lower than CU's. Theirs is at 4.014%. And when we look at, let's go in here to their key data. So right here, you can see their last dividend increase here. Well, they just did it again. This is a brand new one. This is for the December 1st dividend. 59 cents went up to 61.5. So I think these are both fantastic looking stocks that you're going to get some growth with them. You're going to get reliable dividends. That's kind of the big thing. But these are a couple of these, and these are just 2 that popped into my mind because of that reliability of dividend kings. There is a lot of stocks out there that there's a lot of stocks out there that are high up on the aristocracy. A lot of the banks are actually have been raising their dividends for a long time. And you can get lists. There are lists. There's actually an index. There's actually an aristocrat index as well. That if you're looking for ETFs, I can't remember the name of it off the top of my mind, but that hopefully that just gives you a couple of little things to sort of think about. So those are both in utilities. And here's the thing, Steve, I have lots of lists on the channel because that's one of the things I do. So there's lots of information here, and I kind of feel like I'd like to do another aristocrat type video, probably maybe before the end of the year, but definitely in the first quarter of next year for sure, because I do like them. All right. Jeff says, I just chose VDY and my Canadian high dividend ETF. It has all the best ones Canada has to offer: banks, oil, insurance, you name it. Yeah. Absolutely. I mean, some people definitely absolutely love investing with ETFs, and that's a very, very legitimate way to do it. Like, especially if you don't have a lot of time. Because, if you're like, I don't really want to learn, or I don't want to have to follow, 100 companies. Well, that's probably, I wouldn't want anyone to be invested in 100 companies, but let's say 20 companies when you can get a very good diversified portfolio with about five ETFs, five, maybe six. Um, and then you don't even have to worry about what the performance is. If these are good ETFs like Vanguard ones or, some of the iShares, you can, because, you have a management team on that ETF that is, let's say if they rebalance it quarterly, every quarter they're looking through. And if there's a company that's just not pulling up their socks enough, that company is bye-bye and a new company comes in. So they do all that rebalancing for you. They take away a lot of the work. And that's not a bad thing, not a bad thing. So just something to keep in mind. Now, also with a retired, if you're retired and you're, depending on what you want for your portfolio, if you're looking to look at pure income, there are some ETFs that have higher income. You can also get into covered calls if you really, really want to create income. But keep in mind, you do sort of have a little bit of a cap potential when you go in that route. But it's one of those few places, like if you are retired and it's like, I just need this amount of money every month. Sometimes it makes sense to go that route. So just something to keep in mind. There's definitely a lot that you can do to sort of manage your portfolio and definitely get the results that you're looking for. It really depends on what exactly you're looking for. I do need to do another retirement video soon too. And I say that because right now the top two videos on the channel are actually retirement videos. One is an OAS GIS video, and the other is a RRSP meltdown. So that's kind of cool. And the OAS one, it just actually got its 26,000th view this morning. I was like, oh, look at that. All right. Chad says VDY till you die. Kenneth says, VDY, I do have. However, I found the holders are too heavy on financial. Yeah, absolutely. And that's one of the reasons that when you're looking at an ETF, go to the page. Go to the page and you can get so much information on their page, like the breakdown of what they're holding. So you can know. So if you're holding like 3 ETFs and you go to all the pages and they're all very heavy on financial, well, you may, in that situation, want to change up some ETFs, maybe get one that's not as heavy on financial. All right. Jeff says, they are, but banks have been around forever and are way more regulated than US. So I think it's okay to be overweight on Canadian banks, in my opinion. Yeah, absolutely. Just give me a second here. There we go. Yeah, part of the way the Canadian banks is set up. So the Canadian banks started from Scottish immigrants. They created the first Canadian bank. So the Canadian banks are very much built on the Scottish model of banking. And that's one of the things that is built in and baked in a lot of stability within the Canadian banking sector. So that's one of the reasons that I have big faith. I have a lot of faith in the big six, a lot of faith. I don't see us ever losing one. If we do, then we've got some serious problems. That's the way I would put it. All right. Kenneth says, yes, then I'd rather buy VCN when it is more diversified. Poor Rio can. I don't know. I like Rio can. I mean, unless something happened to them today, I don't know. I was actually now I have to go look. I have to go look. Today I filmed and edited that video that I showed you guys the thumbnail for. Oh, REI. Here we go. All right, Rio can. All right, now they're looking fine. They're looking fine. They're still. Whoops, sorry. That's not what I'm looking. I need the 6 months. All right. Yeah, see, they're doing the exact same thing as everybody else. I'm happy with that. Jeff. Let's see. Also, another great ETF for sure. Jay says, I'm debating to swap from XGROW to FEQT since it is cheaper to buy at $13. How much it costs to me is never really the issue. I always look at them and compare them by total return. So you could have, technically, you could have a cheaper stock that has a lower total return, and that may not be the best move if that's the situation. So always check it out that way for sure. See, Jeff says, which one has been getting better returns regardless of share price? Yeah, exactly. That's exactly what I just said. uh, oh, that is it, Kenneth. Thank you. CDZ. That's the Aristocrats ETF. It's not going to, it's not going to give you crazy returns. Like, I'll show you. CDZ. But it's steady. It's nice and steady, and I think it will actually do really well as we move through. So right now it's gone from 27 to 36. So that's actually not too shabby. But amazingly enough, and you would think, okay, it's a dividend that has all the dividend aristocrats in it, or sorry, an ETF with all of them. You'd think there'd be a higher distribution, but it's not. It's like 3.627, but they are a good total return stock. They're not the best, but they're solid. They're dependable. I do like that ETF. All right, there we go. Jonathan says, XDiv seems like a good alternative to VDY if you don't want to be too overweight on financials. I think XDiv is pretty overweight on financials, if I remember correctly. I think it is, but just keep that in mind. Let's see. Jeff said, I said poor RioCan because you asked how many times people. Okay. All right. But you made me look. You made me look, Jeff. So I'll give you credit for that. Kenneth says, yes, I'm heavily weighted in XDiv. Go to the mall. Go to the mall. All right. Okay, guys. I think, yeah, we're almost at 2 hours. These things are only about an hour and a half, but you guys have been fantastic. So I don't mind going a little bit longer when you guys are absolutely rocking it out the way you guys are. You guys, this is probably the best community on YouTube, in my opinion. In my opinion, you guys rock. So we will be back here on Friday. Keep in mind, if you're a channel member, tomorrow night we're gonna have some talking to do as we do our exclusive channel member live stream. I can't wait, and I can't wait till Friday to do this all over again. You guys have been awesome. Until then, everybody, take care, and we'll see you again soon. Bye-bye.